is about to start. Please ask everyone to join. मेरे इधर मोबाइल का नेटवर्क प्रॉब्लम दे रहा है.
अच्छा
हाँ वेबिनार इज हाँ गया अभी गया. और 1 मिनट में स्टार्ट करेंगे. 12:02 रवि. अजीत मैंने डाल दिया.
हाँ ठीक है, वापस डाला. कुछ तो होने दो यार, कुछ भी नहीं होता है.
चलो स्टार्ट रवि. हेलो
Ravi, are you there?
हेलो सोनाली.
Yeah, I can hear you. I'm just
It's live,
confirming with
Nagraj. We
Ravi.
can start, I guess. He has started the webinar. We can start.
Okay, right. Yes, hello everyone. Good afternoon. Welcome to all this special series of weekly derivative expiry webinar F&O Bazaar. I'm Nagraj Shetty, technical research analyst from HDFC Securities Prime Research. I'm joined by my colleague Ajit Nayak. Hello Ajit, welcome to this webinar.
Thank you, Nagraj. Let's begin with the webinar.
Yes, thank you Ajit. Friends, the agenda for today's discussion is how the Nifty is placed on the charts and the short-term trend of the Nifty. What is the intraday chart is suggesting? What are the important levels to track for today's Nifty expiry? And we'll discuss about the daily and weekly chart formation of the market, how the near-term chart pattern is indicating for the market, how the various derivative indicators are placed in the morning session, how they have changed till now, what are they suggesting. Finally, we'll discuss the outlook on the market, derivative trading strategy one should look for in today's expiry and where do we expect Nifty to close in today's expiry session. So let's discuss about the market technicals. Friends, on the chartically, Nifty has witnessed a decline in the morning after a stellar up move of the last two sessions. What does mean on the daily chart? Daily chart from the 25,400 levels, we have seen some tremendous up move from the lower levels. After that, market witnessed a stiff resistance around 26,000, 26,050 levels. Yesterday, we have seen some sustainable upside bounce, and today's session market declined from the higher levels. The 26,000, 26,050 has been acting as a strong resistance, the downsloping trend line, as well as the resistance as per the previous swing high. And the overall chart pattern is indicating the weakness from the higher levels. Though Nifty has recovered very well from the lower levels, the intraday chart is indicating after a sharp decline of in the morning 15-20 minutes, market though made an attempt of recovery, market is still not out of the woods and placed at the hurdle around somewhere around 25,980, 26,000 levels. So the near term trend remains positive for the market. The weekly, daily chart are looking positive, but inherently Nifty is facing stiff resistance at the 26,000 levels, and the overall chart pattern, intraday chart pattern, is indicating that we could see some kind of a resistance building at the higher levels, and market could witness a fall again from near 25,980 or 26,000 levels in the near term. That's what intraday chart is suggesting for me. And now, Ajit, I would like to invite you into the session and to discuss about the derivative aspects of the market in today's session. So, Ajit, good afternoon. We have done the discussion on the technicals, intraday time frame, daily and weekly. On the basis, now let's understand few things from the derivative sides as well. I would like to have your insight on the four things, basically how the derivative data was placed in the morning, how the derivative indicators have changed till now, and what are they suggesting, and what are the important support and resistance to watch out from the option distribution chart. And finally, we'll discuss about the implied volatility. And you can also discuss any other important things you want to share. Ajit, over to you.
Okay, Nagraj. Let's go one by one. Let's understand each and every concept in detail. So first, make sure that my chart screen is visible to you. I'm sharing my screen. Is my screen visible?
Yes, Ajit, it's visible. You can
Yeah.
make a full screen mode and it's visible.
Okay. So yes, it's a full screen mode. Let's go ahead.
Yeah.
What we have seen yesterday. So long buildup was seen in Bank Nifty futures, where open interest rose by 4.78%, with Bank Nifty rising up by 0.76%. Also, a few short covering was seen in the Nifty future, not major one. No long buildup was built at the Nifty futures. Open interest put call ratio yesterday it rose to 1.12 level from 0.19 level. And if you look at from a open interest perspective, 26,100 and 200 level is the level at the which we seen call writing, and at 25,800 and 900 is a level where have seen put writing. And some sort of long buildup was also seen by FIs yesterday. So now we have to see, like to take a call on today's market, we have to see what has changed today. So far yesterday was very blue picture was there, green picture was there, long buildup was there in the Bank Nifty. But most of the expiry, Nagaraj, we have seen that whatever happens a day before, it reverses usually. So that is the same thing we have witnessed today. Why? Because we have seen that at 26,000 level, there was huge amount of open interest was there. So if you look at the open interest, 400 lakh contract was there at 26,000 level. And at put side, near 25,900 and 25,800 level, there is a good amount of put writing which has happened. So market, whenever we see a dip in the market tends to take support near the 25,800 level, which we have witnessed in the early morning as well. And market tend to bounce from that important support, and it may halt near 26,000 level. Why? Because a tremendous amount of open call writing is happening at that level. So whenever anybody is planning to take any trade in the Nifty, they have to consider these two important level, 26,000 level and 25,800 level. In between, the market will remain range bound. Near that level, they can take either short or a long position. If you also look from a distribution, open interest distribution kind of a data, here we can clearly see that the green line, that is highest put is there, and here at the red, highest call writing which has happened, that is at 26,000 and 25,900, which has built up during the day. So this says that call writers are more active when we compare to the put writers, because total 45 lakh contract is added today to the call side, and 31 lakh contract is added to the put side. So put writers are not that active as compared to the call writers. And one thing we should also keep in mind that 26,050 is a very important juncture, and 26,000 being a psychological level. If we crosses that level, then only we can see a good upside in the market. Otherwise, market would remain little bearish to range bound for today, especially for today's session. Yes, Nagraj, over to you.
Yeah, thank you, Ajit. Rightly said, as per the derivative distribution chart and other indicators, friends, 26,000 is a very good resistance for the market, as Ajit mentioned. And market is nearing the 25,980, 26,000 levels. I think as per Ajit, there is a shorting opportunity. We can buy a put, we can go for a bear spread around this level. Ajit, tell me, considering the rationale we have discussed, which strategy we should suggest for the traders for this expiry in Nifty?
Uh, we have to be very precise in today's expiry, because market has already shown a good movement both upside and downside. So that is a reason where market will try to decay its premium. So whenever market comes to 25,980 or 990 level, that time there is a good opportunity to go short in the market. One can look for buying puts at that level. And when market comes near to 25,900 level, there is opportunity to buy call in the market. So in between, I think it is better to stay on a sidelines. Otherwise, due to volatility, the stop losses might easily get triggered. So at 25,990 and 25,900 is a place where we need to act in today's market.
Yes, rightly said, Ajit. So the friends, the summary is the intraday trend of Nifty is negative. The market reversed from near the crucial hurdle of around 26,000, 26,050. However, a sustainable move above this hurdle around 26,050 could open more upside for the near term. So intraday rise towards 25,980, 26,000 levels could be a sell on rise opportunity in today's session for a quick gains of around, gains on the downside of around 80 to 100 points. Derivative indicators are also suggesting a chance of weakness emerging from the higher levels. So the strategy would be one may look for buying 26,000 put around the Nifty spot of around 25,980 to 26,000 levels. When market moves up to 25,980 to 26,000 level, one can look to buy 26,000 put for a quick gains on the market on the downside. Otherwise, trader may also go for a Nifty bear spread strategy by buying 26,000 put at the same time selling 25,900 put for 80 to 100 points a decline in the Nifty towards the end. So friends, this is the strategy for today's expiry. That's all from our side. Thank you, Ajit. Thank you everyone for joining this webinar. Wishing you a happy trading day. We will conclude this webinar. Thank you.
Zero लोग ने देखा, zero.